Michael Burry bought a stake in Signet Jewelers in the first quarter of 2023. With this purchase, Signet Jewelers is the third largest position that shows up on his 13F filing. These include all his US listed stock holdings. And since Burry's 13F was released, Signet Jewelers stock price is down 11%. You may have the opportunity to look at this business for cheaper than Michael Burry did. Signet Jewelers, stock ticker ISG, trades for $69.52. They've had a recent run-up in their stock price, rebounding from their year-to-date lows. Year-to-date, Signet Jewelers is up 5%. In the last 3 years, this company's rebounded extremely well. They're up nearly 7 times. In the last 10 years, we see this business has been cyclical. Its stock price is down 7% overall. Going back prior to the global financial crisis, in the last 18 years, Signet Jewelers stock price is up 51% overall. The company's stock price has been cyclical over this time, falling to extreme lows in both 2009 and 2020, hitting their all-time highs in between then. Signet Jewelers trades between their 52-week low and high, a little closer to their high. Interestingly, 12% of the company's shares are sold short. The company is a $3 billion market cap. They also pay a 1.2% dividend yield. Their dividend yield is added on to the returns from their stock. But the burning question is, why does Michael Burry like Signet Jewelers? Signet Jewelers is a diamond retailer. Its merchandise mix includes bridal, fashion, watches, and others. The bridal category includes engagement, wedding, and anniversary purchases. Its segments are North America, International, and other. It gets the majority of its revenue from North America. We'll be covering the business using our Select 6 analysis before looking at 2 different ways to value Signet Jewelers. Then we'll give a final rating to the business. Starting things off with metric number 1, we want their average return on capital in the last 5 years to be above 14%. There are 2 key reasons for this. Over the long run, over the course of decades, a stock's likely to return what its underlying business returns. These business returns are captured here by return on capital. The average publicly listed business earns about a 7% return on capital. Looking for a benchmark that's double this allows us to build in margin of safety. Signet Jewelers had pretty low returns on capital that were declining into their fiscal 21. Since then, the company's returns have skyrocketed. They earned nearly 20% returns on capital in their most recent fiscal year. Averaged out in the last 5 years, however, the company earns about 12.9% returns on capital in a given year. This is just a percentage point below that benchmark we'd be looking for. While solidly above the average business, this is an X on metric number 1 for Signet Jewelers. Metric number 2, we're looking for growth. We want to see growth in their revenues, net incomes, and free cash flows. This is all or nothing. All 3 have to be up. We're using their last 12 months worth of numbers to figure out their overall growth. During this time, Signet Jewelers has grown their revenues by 25%. Their earnings were negative in 2019 due to some impairments of goodwill and related charge downs. It's good to see that their cash flows were positive in that year. In their most recent fiscal year, their earnings were positive, so that's up here as well. And their free cash flows have been positive in all 5 of these years, even as the business has been cyclical. They've grown by 17% overall. All 3 of these are up. This is a check on metric number 2. Metric number 3, we're looking for earnings per share growth in the last 5 years. This allows us to take the perspective of an individual shareholder in Signet Jewelers. With negative 2019 earnings and positive 2023 earnings, this is a check on metric number 3, as the company's only diluted existing shareholders by 3.5%, and they've grown their earnings by much more than this over this time. Metric number 4, we're looking for free cash flow per share growth in the last 5 years. Their growth in their free cash flows are also outpacing their shareholder dilution. This is another check on metric number 4. So far in our first 4 metrics, we have 3 checks and only 1 X for Signet Jewelers. Metric number 5, we're looking at how they use debt. We want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow they produced in their last 5 years summed together. Signet Jewelers has cut their net debt position by a lot. Right now, they only have $163 million worth of net debt. They produced positive free cash flows in all 5 of these years. In the last 5 years, they produced about $4 billion worth of cash overall. They easily support their net debt position. This is a monster check on metric number 5. The business's balance sheet looks healthy compared to how it produces cash. Before we get to our valuations for Signet, it's time for our bonus metric. As our bonus, we're looking at Signet Jewelers' dividend profile. Right now, they pay a 1.2% dividend yield. The company completely cut their dividend in their fiscal 2021, which covered most of the lockdowns. Since then, they've reinstated their dividend and they've been growing this in their most recent fiscal years. The company has easily supported their dividends using their cash flows in all 5 of these years. Likely not predicted by management, they had a big cash flow spike in the same year that they cut their dividend. While their cash flows per share have declined since then, their dividends are still easily covered by these cash flows in all 5 years. This is a snapshot of their last 5 years of performance, and it's no guarantee for the future. future. This is a check on our bonus looking at their dividends. The big metric of them all, metric number 6, we want Signet Jewelers' average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury and is one of the first ways we'll be estimating a value for the company. Right now, Signet Jewelers has a $3.9 billion enterprise value. This accounts for both their market cap and their net debt position. In the last 5 years, Signet Jewelers produced $4 billion worth of free cash flow, meaning in an average year, they produce about $800 million of free cash flow. When we divide their $800 million of their average free cash flow by their $3.9 billion total enterprise value, that gives a huge 20.5% average free cash flow to enterprise value yield. On a current basis, the company produced $660 million worth of free cash flow in their most recent fiscal year. When that's divided by their $3.9 billion enterprise value, that gives another huge 17% free cash flow yield. Both of these are well above that risk premium we'd be seeking. These free cash flow yields are multiple times higher than the yield of the 10-year treasury. This is a huge check on metric number 6, but don't just run out and go buy the business. We still need to figure out a per share value for Signet Jewelers using a slightly different way to value the business. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze Signet Jewelers, which takes us on to using a discounted cash flow model to come to an estimate of their fair value per share. A DCF model is based off the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. Starting with Signet Jewelers' current free cash flows, we're using historical growth assumptions to grow these into the future. It's up to you to figure out if these are accurate and applicable going forward for the business. Assuming they grow their free cash flows at 7.5% annually for the next decade, then assuming that this growth rate is cut in half for the 10 years out from there, if we add in the company's tangible book value, which gives an estimate of their net worth, and if we're seeking a 15% rate of return, which is the rate of return Warren Buffett's looking for from his investments, in addition to his margin of safety requirements. At today's valuations, it looks like an estimate of Signet Jewelers' fair value per share is around $73.50. That's up about $4 from their current stock price. There are some big things to keep in mind here. Signet Jewelers is a cyclical business. They've had a low degree of predictability in their past. This may also be the case for the future, and it affects the assumptions we're using for this model. This 15% discount rate is an estimate of total returns to shareholders. Most importantly, this analysis isn't financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before considering any investment. In just a moment, we'll give Signet Jewelers our final rating, but we have to address something first. We focused a lot on the quantitative by looking at the numbers, but what are the qualitative factors of Signet Jewelers' business? Starting with the qualitative factors supporting a potential long thesis. Number 1, Signet is the biggest player in a fragmented industry, and it's in a strong position to increase market share as mom and pop shops exit the market. Number 2, there's an opportunity for margin improvement as the recently acquired Zales barely breaks even. This can be achieved via purchasing scale economies, overhead rationalization, and general restructuring. Number 3, Signet's size and balance sheet strength make it one of the few jewelry retailers that can invest in broad advertising campaigns. Advertising remains the most effective way to reach the mass market consumer. Then the qualitative factors supporting a potential short thesis. Number 1, the company needs to invest in its IT systems, which are old and not up to speed. Number 2, Signet relied on in-house credit for 37% of total sales and saw receivable turnover decline in recent years. Practices in relation to receivable write-downs are not the most conservative, and charge-offs are higher than the industry average. Number 3, Signet has a history of negative publicity that can hurt customer perceptions, suggesting problems in the company's culture. There you have it for a balanced perspective of some of the qualitative aspects of the business. Now it's time to give our rating. In analyzing Signet Jewelers, stock ticker SIG, we were trying to figure out why Michael Burry made the company his third largest position that showed up on his 13F filing, making up 9% of those US listed stocks. While that doesn't cover all of Burry's assets under management or show all of his holdings, Signet Jewelers still makes up a not insignificant portion of his assets. The company fared very well on our analysis. While a cyclical business that goes through its own ups and downs, its returns on capital were well above those of an average business, but just below the benchmark we were looking for. They've grown strongly and are able to throw off a lot of free cash flow and use very little debt in their business. The company looked attractive on valuation metrics when we were looking at a yield of their free cash flows to their enterprise value, and they've reinstated their dividend after slashing that in their fiscal 2021. It's worth reiterating this analysis is not financial advice. When we performed our discounted cash flow analysis, Signet Jewelers looks like it has a fair value per share of around $73. That's slightly up from the company's current stock price. The company traded at or below those levels in the first quarter when Michael Burry was buying in. Looking at all the factors of our analysis, Signet Jewelers looks like a very strong candidate for further research, as you could be looking at the company for a similar, if not lower price than what Burry was buying into the business. This is not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, share the next business you want me to look at in the comments below. Thanks for learning about Signet Jewelers with me, and have a great day.